welcome everyone to our very first colloquium series at McGill University. My name is May Hen Smith, and I'm a postdoctoral researcher at McGill, working with Allison to do some teaching and some research in tax. I've done quite a bit of tax research over the past decade, but I've not actually spent that much time in North America in the last 5 or 6 years. So it's really opened me to a really new area of tax from just the perspective from the transatlantic side. But I see that Ivan's been able to saddle both sides of the Atlantic, having spent time at McGill and then now in the European side. And I'd like to introduce him as the professor of, actually, sorry, he's back here. Sorry. So he's a researcher in of national, international tax law and policy. And he focuses on the intersection of tax law with legal theory and political philosophy. And his academic writings appeared in various law reviews and peer-reviewed journals, such as the Canadian Journal of Law and Jurisprudence, the Columbia Journal of Tax Law, the Fordham International Law Journal, Dalhousie, World Tax, and quite a bit more if you do look at his bio on the Osgood York University website. He's been a recipient of multiple awards for his scholarly work, including the 2018 IFA USA Writing Award by the International Fiscal Association and the 2019 Paul Gérine Lajoie Rising Star Award by the Fonds du Research du Québec. This is hard for me. Society et Culture, so the FRQSC. And he currently sits on the editorial board of the Journal of Contemporary Public Law and serves as a reviewer for several journals in the fields of law and philosophy. Now, I've heard of Ivan's work and I've seen his tweets, and I know he's been around for quite some time, but I've not actually had the opportunity to do a deep read of his work. And so when he sent us his paper, the class spent a full 2 hours reading, had spent time reading the paper and then a full 2 hours discussing the paper. And I think one of the things that really impressed me was that the students were able to grasp quite a few of the concepts, which are actually pretty difficult for me to comprehend. And I think the takeaway that we got from his paper was that there was a pretty clear pathway to the solution that he proposed, and that the solution really just required some push from certain communities to get it sort of through the process. So I think the students have quite a few questions from this paper, and we look forward to the presentation and hope it will clarify some of the thoughts we have, and we hope to have a great discussion. So the floor is yours, Ivan, and thank you very much for joining us.
Thank you so much, May. It's so great to be back here to McGill, although only virtually, and so thank you so much for hosting me, and great to be back with Allison. Some of the few prizes you mentioned, they were all supported and by my great mentor, Allison. So it's really great to be here. So let me see if I can share my screen with you. Good. So for the benefit of the students, this is going to be a bit longer talk than a usual, let's say, a conference talk would be, because we will be discussing some more basic and fundamental concepts about the paper. But what we will talk today, we'll talk today about a topic that you will likely hear more and more in the media if you haven't heard of it yet, especially if you are in Canada, the US, or the EU, and that is what we call a border carbon adjustment. So the European Commission has proposed to enact what they call a CBAM, a carbon border adjustment mechanism, and they expect to have it started in 2022. The US also, the Democrats proposed a bill in Congress also to implement a border carbon adjustment, and if passed, it's set to begin in 2024. And Canada still doesn't have a proposal, but it has first raised the idea of a border carbon adjustment in the last budget, and recently launched a consultation paper where they outlined some questions for designing and introducing a Canadian border carbon adjustment. So it seems like there's a significant chance that we will be talking about border carbon adjustments for the next few months or years. So what's a border carbon adjustment, or a BCA, as I'll refer to it from now on? Well, the idea of a BCA has been proposed almost 50 years ago in the literature, and mostly remained a very controversial academic discussion. But now, after the European Commission started discussing implementing a BCA in March last year, it has become more mainstream. So what's a BCA, and why are governments thinking of adopting one? So the main reason behind a BCA is the absence of one global price on carbon, or a coordinated pricing system across the globe. So today, each country is basically free to determine how and how much they will contribute to reducing carbon emissions. And because of that, we have different carbon policies across the world. And the problem is, if a country decides to adopt a more stringent carbon policy, let's say by raising a carbon tax, for example, the policy effects of the tax may be undermined because of international trade. So to simplify, suppose we have two countries, country A and country B. So country A decides to adopt a carbon tax. So it starts charging a tax on oil of, for example, $50 per ton, which would mean something around 10% of the current market price. Assuming the tax burden will be passed on through the value chain, anything that requires oil to be produced in country A will now be more expensive. So two things are likely to happen. One, carbon-intensive goods produced in country A are now more expensive. So if country B, which doesn't have a carbon tax, makes the same good, now importing the good produced in country B may look more attractive than buying the same product produced in country A. And so country A will lose competitiveness due to its new carbon tax. The second thing that may happen is that, as a consequence, carbon emissions in country A will effectively reduce, either because now there's less demand for the goods produced in country A, or because producers in country A may decide to relocate to country B, where production costs will be lower due to the lack of a carbon tax in country B. But although the new carbon tax will reduce carbon emission in country A, it may not reduce global carbon emission, because emissions will just shift to country B, which now will produce more of those carbon-intensive goods to supply the increased demand in country A. And so the carbon emissions that shifted from country A to country B will now return or leak back to country A, embedded in the imports from country B, and that's what's usually called a carbon leakage. So at least that's the argument advocated by the advocates for a BCA. I don't know that we have research to support the degree to which these things will happen, but it does make sense that these effects are, at least to a certain degree, expected to take place. So to avoid these effects, what country A may want to do is to impose a tax at the border on the imports coming from country B. That's what we call a BCA, a border carbon adjustment. The BCA will reflect the carbon tax that applies domestically in country A's production. And so the BCA will offset or cancel these negative effects of the domestic tax. Now, a BCA can take different forms. The main forms would be, first, it could be an import tax that would reflect the carbon price in the enacting country, that is, in the country that is enacting the BCA. The enacting country, instead of having a carbon tax, may have opted for a cap and trade system. So a cap and trade system means that instead of taxing carbon emissions, the country puts a cap on how much carbon can be emitted in the country by issuing allowances or permits that can be traded among market participants. So a country that has a cap and trade system may want to adopt a BCA that, instead of taxing the import at the border, requires the importer to purchase permits according to the amount of carbon content in the imported good. So that's the second form of BCA. Now, some countries may additionally give a rebate to domestic producers. So because prices of domestic production in a country with a carbon tax have been increased by the domestic carbon tax, what this rebate does is to offset the domestic carbon price so that the domestic production becomes more competitive overseas against production of other countries that don't have a carbon tax. So when a BCA includes this export rebate, that's what some people call a full border carbon adjustment, because you will be adjusting both your imports and your exports. And finally, you would expect that a BCA allows importers to deduct whatever carbon price that has been paid in the country of production. Otherwise, the BCA will not just be offsetting the negative effects of the domestic carbon policy, but would be going beyond and actually favoring domestic production. So it seems obvious that it needs to allow deduction, but from what I read in the US bill, it doesn't look like they do. I may have misread the bill, but I couldn't find any provision specifically allowing for that. And if that's the case, it would be a serious problem trade-wise. Now, what are the effects of a BCA internationally? So its main economic effect is to impose on foreign produced goods the same level of carbon prices imposed domestically. And so it will affect the balance of trade by making domestically produced goods more competitive. Its main policy effect is to compel countries with no or low carbon prices to raise them to the level adopted in the country that has enacted the BCA, especially if they significantly rely on exports, because even if these countries don't have a carbon tax, their exports to the country that has a BCA will be taxed anyway, but the tax revenue will benefit the enacting country instead of the country of production. Now, this policy effect may produce the desirable consequence of leading other countries to reduce their carbon emissions as well. And that's one of the arguments that's usually made in favor of a BCA. But the problem is that it will also harm countries with limited capacity to cut back emissions. And there is a broad agreement that a BCA will impose a disproportionate burden on developing countries. So let's see why. So first, developing countries are likely to be more impacted because they generally are net carbon exporters. So they tend to produce more carbon intensive goods than consume themselves. They also tend to have less stringent carbon policies. So a BCA would for sure apply to their exports. And also production in developing countries is generally more carbon intensive than in OECD countries, for example, for lack of clean technology. So it's not without reason that some have suggested that the main target of a BCA is developing countries. And the main problem is that although emissions in developing countries have increased in the last years, in great part because the developed world has outsourced much of its carbon-intensive production to these countries, per capita emissions in developing countries are still significantly lower than in developed countries. So to take two major economies as an example, China has surpassed the US in total emissions in the last 10 years, but still per capita emissions in the US is more than double that of China. So requiring developing countries to adopt the same carbon policies as developed countries that emit so much more per capita seems problematic. And also considering the lack of widespread clean technology today, carbon emissions are still needed for development, particularly in developing countries that need substantial expansion in energy, transportation, production, urbanization. So from a global perspective, climate change is a problem that needs to be addressed considering two interrelated concerns: reducing global carbon emissions on the one hand, and meeting the development needs of poor countries in the other. And this double concern has been acknowledged and recognized in the 1992 United Nations Framework on Climate Change. And so the UNFCCC established the principle of common but differentiated responsibilities, CBDR, which means that responsibility to address climate change should be shared among all countries, but that it should be differentiated based on each country's past contribution to causing the problem and its capability to resolve it. And because developed countries have been the main historical contributors to the problem, and because they have more capacity to address the problem, the CBDR principle basically determines that they should bear a greater burden in addressing climate change, or as Article 3 says, they should take the lead in combating climate change. So what does CBDR mean for border carbon adjustments? CBDR requires that a measure such as a BCA should differentiate among countries. So it should not be a flat, uniform border carbon adjustment. It should be what I would call a differential border carbon adjustment. And a differential border carbon adjustment would mean a BCA that exempts or provides reduced rates for developing countries. But this leads to several legal and practical problems. So the first problem is the potential conflict between CBDR and WTO law, specifically with the most favored nation principle. The most favored nation principle, or MFN, and I apologize, I'm going to be using a lot of acronyms in this presentation because these terms are so long. So the MFN is established in Article 1 of the GATT, the General Agreement of Tariffs and Trade. And it's not only one of the most important principles in the GATT, but it's often considered to be the cornerstone of the entire WTO's multilateral trading system. And what it states is that a WTO country should not provide a differentiated treatment among other WTO countries. In other words, WTO countries should give other WTO countries the same treatment as if they were the most favored nations. That's a reason for the name. So it basically means that WTO countries should be treated equally. Now you can see how MFN could conflict with CBDR, which instead of requiring countries to be treated equally, would require them to be treated differently. So at first glance, these two principles, CBDR and MFN, are in direct normative conflict. So how do we solve this conflict? So the first thing to do is to consider whether we can find in WTO law itself any provision that would accept an exception to MFN. If such an exception would make space for CBDR, then these two principles wouldn't be in the end in conflict with one another. So two exceptions could potentially apply here. One is what we call special and differential treatment, which is established by Part 4 of the GATT and by a GATT decision that is usually called the enabling clause, which specifically allows developed countries to provide more favorable treatment to developing countries. Although it may look somewhat similar to CBDR, they are different in two main respects. So first, some suggest that their policy goals are incompatible because CBDR favors developing countries with the goal of addressing climate change, and special and differential treatment favors developing countries with the goal of including them in the multilateral trading system to promote international trade. So because of the different purposes, some argue that the SDT regime wouldn't make space for CBDR as an exception to the most favored nation principle. But also WTO law has specific requirements for SDT that would probably not allow the type of differentiation that CBDR requires. Now, the other WTO rule that could potentially accommodate CBDR is Article 20 of the GATT. And Article 20 of the GATT is the provision that many people believe would allow a border carbon adjustment itself not to violate WTO law. But also many people argue that this is the provision that would also potentially resolve the conflict between CBDR and MFN. So let's take a look at Article 20. Okay, so this is very long and we're not going to read the whole thing. But what it says is basically that a measure such as a tariff or a border tax relating to exhaustible natural resources, as you see in paragraph G at the bottom, could be accepted under Article 20, provided that, quote, it would not constitute a means of arbitrary or unjustifiable discrimination between countries where the same conditions prevail. So what some have argued is that because developing countries are not in the same conditions as developed countries, because they don't have the same level of economic development, this would mean that they could be differentiated and such discrimination wouldn't be unjustifiable. And that interpretation of Article 20 would mean that WTO law would accept CBDR as an exception to MFN. Now, that interpretation may end up being accepted by WTO adjudicators, but it's not clear that it will. If you look closely, this is not a very straightforward line of reasoning. So what we're doing here is we're taking Article 20, which generally provides for an exception to WTO law that would allow a border carbon adjustment to be implemented. This is also not a certainty. And we're looking at the condition for this policy to be accepted as an exception, which is, it should not constitute a means of unjustifiable discrimination. But this condition only applies between countries in the same conditions, which conversely means that discrimination would be allowed between countries that are not in the same conditions. So to be sure, we are making an implicit assertion that in logic we call an appeal from the contrary to interpret the exception of the general WTO rules. So first, if this line of reasoning is not that clear to you, it's because it isn't an easy line of reasoning to follow. But also, even those who raise this argument to reconcile CBDR with MFN are not always very optimistic that WTO adjudicative bodies will accept this interpretation. And I will not go into the details of how the WTO's appellate body's jurisprudence, but some past decisions of the appellate body on the chapeau of Article 20 do not seem to interpret the term same conditions to mean same economic conditions, so as to refer to different levels of development. So there is a chance that Article 20 will not be interpreted to allow the reconciliation between CBDR and MFN. But the main problem I found in the literature on this is that that's where the legal analysis generally stops. If a WTO's adjudicative body accepts this interpretation, then we're fine. But there's not much discussion on what results if Article 20 is not interpreted as accepting CBDR. So some seem to suggest that the WTO would just disallow, in case Article 20 is not interpreted as to allow CBDR, WTO would just disallow a differential BCA because it would be considered to violate the most favored nation principle, and so CBDR would just not apply. And others seem to believe that we would have to live with this normative conflict so that governments will have to decide which norm to comply with and which to violate. And I don't think that makes sense. The main role of legal analysis is to resolve these normative conflicts so as to determine what directive we should follow. And a conclusion that we just have two conflicting norms and it's up to you to decide which to violate seems to me problematic. So what I do in this paper is to ask what results if Article 20 does not accommodate CBDR. What happens is that we will have a conflict between these two principles, CBDR and MFN, and we will need to find a solution to resolve this conflict. So the first step would be to try to apply the general rules for solving conflicts of norms. I'm not sure how familiar North American lawyers are with these, so I'm just gonna do a brief explanation. So the hierarchical rule, also called lex superior, it's one of the main rules for resolving conflicts between two legal norms. So it determines that a higher ranked norm, such as a constitutional norm in domestic law, for example, prevails over lower ranked norms. So in international law, we actually have little room for this hierarchical rule because there are usually no hierarchy between treaties at the international level. One exception would be what are called jus cogens or peremptory norms, which are considered to bind all states and override any international law rules. Another is the UN Charter, which self-proclaims its superiority over other international agreements. But besides these two cases, treaties don't usually have hierarchy. And that's the case between the UN FCCC, which establishes CBDR, and the GATT, which establishes MFN. So because there's no hierarchical primacy between these two treaties, the hierarchical rule doesn't apply here. Then we have the specialty rule, lex specialis. The specialty rule determines that a special rule should take priority over a general rule. The reasoning behind this rule being that the specific rule is better able to take particular circumstances into account. But the specialty rule only applies to conflicts between general and special norms. So the specialty rule also doesn't seem to apply to the MFN CBDR conflict because these are two general principles that cover different regulatory areas, and one doesn't seem to be more specific than the other. And last, we have the chronological rule, also called lex posterior, and the idea here is that the later in time treaty should prevail over the earlier in time treaty. If we were to apply this rule to the MFN CBDR conflict, it would be very straightforward because you just look at the dates of the treaties. So the GATT was signed in 1947, the UNFCCC was signed in 1992. So because the later in time was the UNFCCC, CBDR would have priority over MFN. But as simple as this would be, there are many reasons why lex posterior should not apply in this case. In the paper, I go into more detail on the discussions we have in the literature on the 1969 Vienna Convention on the Law of Treaties, which generally establishes the general rules for drafting, amending, and interpreting treaties. But to summarize the discussion, I will just say that Article 30 of the Vienna Convention only allows the use of the chronological rule when the conflict is between two norms regulating the same subject matter. And because CBDR and MFN relate to different subject matters, lex posterior doesn't apply here. So what we can see is that these rules don't help us solve the MFN CBDR conflict, but we had to go through them to make sure. And actually, both in domestic law and in international law conflicts, these rules are known to be limited in scope and not to apply to all cases. And whenever we are in a situation where they don't apply, we generally need to resort to other more nuanced or sophisticated solutions. So one promising approach is what has been called the purposive approach. Those who are familiar with statutory interpretation in North America should be familiar with the method of purposive interpretation. These are similar, but they are different in scope. They're similar because both require interpreters to consider the purpose of the provision. But the difference is that the purposive interpretation, as adopted in North America, focuses on how to better understand the scope of provisions and analyze the purpose of the provision. And it's actually not a method for resolving conflicts between norms, but it's a method for determining the meaning of texts. That is what the legislator intended to convey with the text that was used in a specific provision. Now, the purposive approach we are considering here is not about interpretation of the meaning of texts. It rather is determining that we should resolve the conflict of two norms in a way that avoids frustrating their individual purposes. So applying the purposive approach to the MFN CBDR conflict would require us to look at the specific policy measure we are considering and analyze which design option would optimally fulfill the individual purposes of these principles. So we would be resolving the conflict not in abstract terms. We would look more concretely at the different policy options we have and see which of them maximizes the fulfillment of the principles in conflict. So if we go back to our two main design options, a differential BCA would differentiate among countries according to their different levels of development. And so it would favor CBDR, while a uniform BCA would apply uniformly to all countries and would favor MFN. So applying the purposive approach would mean asking, would a differential BCA that favors CBDR frustrate the purposes of MFN? And conversely, would a uniform BCA that favors MFN frustrate the purposes of CBDR? So by analyzing these two questions, we will be more prepared to determine which principle should apply to BCA so as to optimally fulfill the purposes of both principles. And when we consider these questions, the conclusion we reach is that the differential BCA is the one that better passes the test. So let's think first of a differential BCA. A differential BCA would not defeat the main purpose of the most favored nation principle. The main purpose of MFN is to avoid favoritism and unjustified discrimination. So if differentiation is based on transparent and justified criteria, in this case based on CBDR, it wouldn't frustrate the MFN's concern about favoritism. And more importantly, the most favored nation principle is highly flexible. So in the last years, MFN has been increasingly mitigated by preferential trade agreements among specific groups of WTO countries. So one exception to MFN that I didn't mention before is that WTO countries are allowed to sign preferential trade agreements so that the parties to these agreements will have more favorable treatment than other WTO members. And WTO law accepts this. Also, the fact that MFN accepts the special and differential treatment, SDT, that I mentioned before, shows that the most favored nation principle is flexible enough to fulfill its purposes despite several exceptions, as long as these exceptions have justifiable criteria. Now, on the other hand, a uniform BCA would likely defeat CBDR's main purpose. A uniform BCA basically assumes that all countries should have a similar level of carbon policy, And as such, it penalizes developing countries with less strict carbon policies. So it effectively compels developing countries to adopt carbon policies similar to the country enacting the BCA. And so it clearly frustrates the main purpose of CBDR of balancing, on the one hand, global emission reductions, and on the other, the support for developing countries to meet their development needs. Okay, so having concluded that CBDR should apply to border carbon adjustments, then the question is, what does CBDR require? So CBDR is such a general principle that it leaves open some questions on how a BCA could comply with CBDR, which are the what, the who, and the how questions. So what are the mechanisms, who should it apply to, and how to differentiate? So every time I talked about differentiation, I referred to a differential BCA as if this would be the only way for a border carbon adjustment to comply with CBDR. But to take the example of the EU CBAM proposal, the European Commission did acknowledge that a BCA would harm developing countries, but they also argued that an exemption would not be ideal because it would encourage them to increase their levels of emission. And so what they propose is to adopt a uniform BCA, but to simultaneously adopt what they call compensating mechanisms, by which they mean they would provide technical assistance, technology transfers, capacity building, and financial support. Of course, it would be great if they provide that, but what they seem to forget is that CBDR actually entails two separate cumulative normative requirements. So one is the requirement to differentiate commitments and standards between developing and developed countries. And the other is the obligation for developed countries to provide financial and technical assistance to developing countries to help them implement their obligations. And addressing requirement 2 doesn't compensate for the failure to address requirement 1. Since developed countries are already under the obligation to provide developing countries with technology and financial assistance, compliance with that obligation doesn't authorize them to unilaterally compel developing countries to undertake similar commitments with respect to their carbon policies. And besides, technology transfer and financial assistance are critical to achieving emission reductions in the developing world, but they will likely produce results in the mid and long term, while a uniform BCA would produce immediate negative impacts on developing countries that would, at least in the short term, likely not be offset by these compensating mechanisms. And so I would argue that a uniform BCA, even with these compensating mechanisms, would violate a CBDR. Now, the next question is, how much differentiation should exist? Should we differentiate, for example, between developing and developed countries? So just create two different regimes for countries in either of these two boxes? Or should we even consider a third box, the least developed countries, and only differentiate these countries from the rest? That's actually what the EU and the US attempt to do with their proposals. The EU proposes to provide the compensating mechanisms only to LDCs, and the US proposes to exempt only LDCs. But all other developing countries would be treated the same as any developed country. And of course, their main concern here is China. So is that the way to go? Or should we take a more granular approach and differentiate not only between these groups, but also among countries within each group? In other words, should we only have 2 or 3 degrees of differentiation, or should we have several ones. So in the paper, I go over some of the history of how countries shifted their original view of differentiated by groups towards a more granular approach. So to summarize, in the last years, many countries, both developed and developing countries, have increasingly endorsed the more granular approach in recent treaties. And from a normative perspective, the granular approach makes much more sense. Besides the fact that these broad categories, developed, developing, emerging countries, LDCs, besides the fact that they are somewhat arbitrary, the normative requirement of CBDR to distinguish between countries based on their historical contributions to the current environmental damage and their capabilities to reduce emissions seem to warrant a more nuanced differentiation. And so a differential BCA that differentiates countries at a granular level is more likely to comply with CBDR. And then the last point is what criteria to use in practice for differentiation, because it's one thing to say that we should differentiate based on countries' historical contributions and capabilities, but another is to say what actual measure we should use to estimate these variables. And there's an endless debate in the political theory literature about how to determine that, especially how to determine what historical contribution even means. But to make it more practical, I can see two main policy alternatives available. So, and the two of them would consist of applying a multiplier that I would call CBDR multiplier to the BCA. So whatever the amount or rate that the country enacting a BCA is considering for the BCA, you would apply this CBDR multiplier to that amount or rate, and you would have, as a result, the differential BCA. Now, this multiplier will be a number lower or equal to 1 or 100%. It cannot be greater than 1 because what we're trying to do here is to reduce the BCA for developing countries, not to increase what the original BCA amount should be. So there are two main alternatives I would consider. And this is the first one. For the lawyers in the call that are not very keen on math, I promise you this is much simpler than it looks. So the first thing, this first version compute two things. It uses countries' per capita income to determine the different capacities they have, and uses per capita emissions as a proxy for historical contribution. F here stands for foreign country and E for enacting country. And I refers to per capita income and E refers to per capita emissions. So what this formula does is basically, and M will be the multiplier. So in this formula, we consider the per capita income in the foreign country in relation to the per capita income in the enacting country. And we also consider the per capita emissions in the foreign country in relation to the per capita emissions in the enacting country. So if the lower the per capita income is in the foreign country, the lower the multiplier is going to be. And as a consequence, the lower the amount of BCA that will be charged from an exporter from that country. And similarly, the lower the per capita emissions in the foreign country in respect to the per capita emissions in the enacting country is, the lower the multiplier and the lower the BCA amount or rate. And the X and Y here, they are just coefficients to weigh these two factors. So if we want to consider that these two factors, per capita income and per capita emissions, they are equally relevant to the formula, we would choose 50% for one and 50 for the other. So X and Y would both be 0.5%. If we would think that maybe per capita income should be more relevant in the formula, we could attribute, for example, 0.7 for X and 0.3 for Y, so that we can give more weight to per capita income. And as I mentioned before, the multiplier needs to be equal or lower than 1. Otherwise, the multiplier will be increasing rather than reducing the BCA amount. Now, there are a few problems with this multiplier, mostly because of the use of per capita emissions. But the main problem I will mention is that current per capita emissions is a very poor proxy for historical responsibility, especially because many developing countries that have recently increased emissions had a much lower role from a historical perspective. So if we compare, for example, past and current per capita emissions in the United States, China, and South Korea, just to use a few examples, we can see that using current per capita emissions doesn't accurately reflect their past contribution. And it will inevitably disfavor developing countries that today have a much higher per capita emission level than in the past. And so an alternative would be to exclude per capita emissions and consider only per capita income. Because we know that today's developed economies are in great part the main historical contributors to the current state of environmental degradation, a multiplier that considers only per capita income may more accurately reflect not only different capacities, but also different historical contributions. So to conclude, the implementation of a border carbon adjustment may have some merits in allowing the country enacting the policy to pursue its own reduction targets, but this should not be at the cost of imposing an unbearable burden on developing countries. Addressing climate change requires also taking into consideration the other important goal of allowing developing countries to reach their development goals. That's, after all, the main idea behind the notion of sustainable development. And so the goal of this paper was to show that this is not just a moral concern, it's also a legal requirement that is at the core of the United Nations Framework Convention on Climate Change. And it's also a political necessity. So the common but differentiated responsibilities principle has played a fundamental role in achieving global agreement on the need to address climate change. So failing to recognize a CBDR will likely stifle international cooperation instead of promoting the pursuit of reducing global carbon emissions. Thank you.